One top story that we're following this morning, the crypto crash. Crypto prices seeing steep losses even after Binance's CZ cut a deal to take on FTX. The exchange seeing instability after a CoinDesk report created liquidity concerns. Joining us with a broad look at crypto and post-election market movements, we've got Anastasia Amoroso, iCapital Chief Investment Strategist. Thanks for joining us in studio today.
Good to see you.
Absolutely. Well, perhaps we start off with this crypto plunge that we've been watching. We were already in a crypto winter and washout, as we've talked about before. But the deal certainly casting a ton of light on what the future of crypto may actually look like. What would you say is perhaps the biggest takeaway from a tie-up, a mega deal like this?
Yeah, I have a couple of takeaways. And the first one, I'm actually surprised how resilient the broader markets are in the face of this crypto meltdown. And because anytime you hear things like liquidity crunch, it harkens back to 2008 and think what else is going to break, what else is going to unravel. But I think one of the silver linings today is that crypto has not permeated the entire economy. It's not the housing market. And if you look at the percentage of people in the United States that had exposure to crypto, it's in the low single-digit percentage. So it's not double digits like it is in certain countries. So I think that's what's saving the market sentiment here. But then things that do harken back to the financial crisis, in my view, is this is leverage on leverage. This is exuberance and froth built on one another. And it kind of reminds me, back to the CDO squared, where, everything was kind of, tied in together. And I think a lot of that has been built into the crypto ecosystem, which now has to unravel. But that brings me to the third point is I think consolidation in a space like that, in a new space, it is good. It's going to flush out the froth. It's going to make businesses that are viable stay and survive. And that's what we need. I think there's absolutely merits to the crypto ecosystem. It's just that we needed to do away with the exuberance. One last point I will make on that, it's all been about DeFi and moving away from the banks, but guess what's happening now? The crypto is actually being adopted by TradFi. So it's back to a JP Morgan and a UBS and, a KKR actually using the blockchain technology to build out viable solutions. So I think the merits of crypto is still very much there. It's just they're sort of migrating back to TradFi.
Do you see contagion happening over the next few days? This situation is still unfolding. I think you bring up a great point. We have not seen markets sell off on this. You'd think at first blush, maybe we should have or should have gotten it.
Yeah, I don't think it's going to cause broad market contagion. I think it is going to cause contagion within the crypto ecosystem. And I'm sure there's other skeletons in the closet and players that may have to be flushed out. But again, this is $3 trillion that was not of market cap that has to deflate. And it's not been broadly embedded in the financial system. But one thing that kind of rebalancing of crypto and also the rebalancing of big tech does, it changes the market leadership. And I think that's why it's going to be really difficult for the markets to rally broadly, is because you have a big chunk, tech dominant players that are now not able to lead the markets. And so as much as the other stocks try, the overall market might be just capped by this rotation out of, unprofitable tech and big tech as well.
What does this mean for some of the biggest profiles in crypto? I mean, we've already seen kind of this exodus from the most speculative assets in the broader sell-off in both equities markets and the crypto market. But for some of the biggest names in crypto, like a Sam Bankman-Fried, like a CZ, where does this really cement their positioning and their stake in the broader crypto landscape and even in the broader blockchain landscape if we kind of look at the broader technology around it?
Yeah, I heard this great quote from a former colleague of mine, but it really stuck with me, which is if you're in crypto, make sure you're in it for the mission and not the money. And I think, every founder, every VC that's supporting the blockchain ecosystem really has to think about what is the use case, what is the utility, what is the mission of any particular crypto solution. So I think every business owner is going to have to look very hard at their own business and make sure there's the use case. So that's one thing I would say. The other thing is this whole deflation of the crypto ecosystem. I think this plays right into the Fed's hand because they needed to get exuberance out of the system. Why was there an outsized appetite for, certain housing or boats or whatever it may be? Is because a lot of wealth has been created, which unfortunately is now being taken back. So in a way, I would say the unfortunate layoffs that we're seeing, whether it's crypto or big tech, is exactly what the Fed wants to see to bring down the overall market sentiment, sort of in check with reality.
Against this really volatile backdrop, it's also the day after the election. And the mood here is that there is no red wave, and now we might get potential chaos in government. What do you think that means to markets?
So broadly speaking, gridlock should be a positive, which probably means no new tax increases, and it probably means no new fiscal spending and the other way around. So that the status quo should be good for markets. But there's one issue that we will have to watch, which is there's the debt ceiling, negotiations that will have to come in the first quarter of next year. And given the gridlock government, which we seem to be on track for, that's going to make those negotiations a little bit harder. So, these markets have a lot to contend with, and if you throw the debt ceiling on top of that, this could create more opportunity for choppiness. As far as sector winners and losers, you really can't draw any conclusions, because I would have said that a Democratic sweep would have been positive for clean energy, Republican would have been positive for the regular traditional energy, and we don't have either one. So it's really all about the debt ceiling, and really the next big issue, which seems like will be up for discussion the next presidential election, is the tax cuts from 2017 do expire. So what do we do with those? But we're not going to tackle that for the next 2 years.
With gridlock in Washington post midterm elections, is there any legislation that you would foresee coming forward then that would help end consumers, help the population or the economy in the event of a more severe recession?
It's not immediately clear that it would pass. But I do think that if we were truly in for a deep recession, I think whether, we would have enough bipartisan support to pass those measures. But I don't think we're on track for, a deep recession that would require that sort of fiscal response. I think it's really all in the Fed's hands right now. And that's going to be the key authority, the key monetary authority to watch.
Scary place to be for investors if everything's in the Fed's hands.
Scary place for Powell.
Yeah, absolutely. Anastasia Amoroso, iCapital Chief Investment Strategist. Good to see you in the studio. Appreciate it.
Great to see you.